Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap. And this is September 28th, the last weekend in September. And let's get on with the market. Another winning week on the street. Personal consumption inflation is now 0.1% month over month, and this is better than the market expected. So this gives more reason for the Fed to continue to lower interest rates. And our weekly stock analysis video, MasterCard or Visa? Yeah, you get asked that all the time. No, not which card do you want to use, but rather which of these stocks have performed better and which of these stocks will return more for you in the future. And MasterCard and Visa have been in our growth portfolios. Visa is no longer there, and we're looking to see if MasterCard is going to stay there or not. And let's go to our ETF video and which are the best stocks in the best ETFs and how to perform almost any ETF by picking the best stocks in those ETFs. And let us look at the S&P 500 index. Top band and the bottom band of volatility bands, and you can see they're widening out, which is good for the market. Center line is a 20-day moving average. So every now and then we expect a reversion to the mean, as they call it, and this market will come back down to test that 20-day moving average, as it did over here, fell through it, gave us a nice buying opportunity in here, and we're still working on this rally because this market does not want to quit. Even though yesterday the S&P, and I'm talking about Friday, the S&P closed down 7.2 points. But our intermediate term indicator down here is still pointing up. Let's go to the QQQs. Now, this is the NASDAQ 100, and we use the QQQs, or the top stocks in the QQQs, for our top performing portfolio. We'll see that in a second. So let's see what happened yesterday. Well, it went up to this top band, and you can see right here that it went up and actually hit it, and then came back, and this right nub on the line, on the vertical line here, this horizontal nub right here, that's where it closed for the day. That was Thursday, and Friday you can see it closed down a bit. Indicator down here, intermediate term indicator, still pointing up. Now the Dow Jones actually closed up for the day, went up above that band, couldn't hold it, and came back down, but still closed up about 137 points. So what we have here is a dichotomy in that Friday is an important day because Friday means whether people are confident going over the weekend because if something happens internationally or nationally, they can't get out of the market. So the Dow Jones closed higher on Friday, which means that people are very, very confident, but the S&P and the QQQs and the NASDAQ all turned down a little bit on Friday. So we have a little bit hesitation there, and 5 out of the 6 Fridays the S&P has closed up, so that's about the limit, and maybe we're looking for a do-nothing market. Don't forget, we're in the weak period of the year, September and October, or I should say September and then the beginning of October, and usually October sees the low of the weakness of September, but September has not been weak this year. And so we also have the end of the month trading on Monday, and usually toward the end of every month during a good market, toward the end of every month we see the market rise, and then more money comes into the IRAs and the pension funds on Tuesday, which will be the 1st of October, and that money has to be invested. So usually we see a slightly upward period during, in this case, Thursday, Friday, and Monday and Tuesday. But Mondays are usually a weekday anyway, so we'll see, folks. It's going to be a cute little first couple of days of the week next week coming up, and we'll see what the market does in here. But we're looking for pretty much a do-nothing market, up and down, up and down, up and down, but going sideways for a little bit. But we'll see what happens. And let's look to see what the market has done, or our portfolios have done. And this was taken on midday on Friday. And our top QQQ portfolios, in other words, the top stocks in the top 100 of stocks of the NASDAQ. We take about a dozen stocks out of that fit our criteria. That portfolio is up 34.2% as of midday Friday. Our sector stars is we take our favorite ETFs and a couple of stocks out of our favorite ETFs. And there's about 18 stocks in that particular portfolio. That's up 30.8%. Our growth portfolio, 30 stocks from all over, mostly the S&P 500, and then we have another couple of hundred stocks we look at. That's up 26.1%. Our dividend growth and income portfolio is actually outperforming our growth portfolio. Dividend growth and income portfolio is really pretty good. So we combine growth and dividends, and we want to see stocks that have a 7 to 8% appreciation potential and 7 to 8% dividend growth. And this year, as usual, as in most years, the growth part of this portfolio has been very, very good indeed. And the S&P, and they are all our four portfolios, our four main portfolios, are outperforming the S&P 500 index. So, as usual, we are leading the S&P 500 index. We've done so not every year for 22 years, but over the past 22 years, we have, on a compounded basis, beaten the S&P 500 two times on Buffett's Berkshire Hathaway portfolio, so we've doubled his portfolio, and 2.5 times the S&P 500. So that's quite a running track record, folks, and all of those will be on our new site, BuffettandBeyond.com, which should come out in about 2 weeks. We have a site already, but we're updating that whole site. And portfolio protection, we went out and we bought a December 485 put. You can see these SPY puts are going up because the market's going up. So we try to keep protection around 12.5% below the present level of the S&P 500. And this is our disaster insurance. And every now and then we have a crazy market and the market falls. And this is so you can sleep at night. You're hedged about 12.5% below the market. And as the market declines, these puts gain in value. So you're buying puts that increase as the market goes down. And we've had to use them every now and then, but some people keep them in the portfolio all the time. So, folks, we had another good week. Oh, my gosh, we're just rocking and rolling with the Fed now on our side, lowering interest rates as they did last week, and or I should say the week before this previous week, and they intend to lower interest rates even further. And with the good readings we had on the personal consumption level this week showed inflation is still coming down. So the Fed has room to roam, and it says it's going to roam by decreasing rates, and real estate is showing that, and we're seeing that in the other videos this week. So, folks, good week. You go out, forget about the market, because guess what? It'll be here again next week. You go out, clear your head, be with your family, have Sunday dinner with your family. How's that for a nice family outing? And folks, just go out and stay safe, and we'll see you right back here in a couple of days.